Opening. What would have happened if you invested $1,000 in NVIDIA in 2018? Imagine this. It's the year 2018, and you've got a crisp $1,000 bill burning a hole in your pocket. You decide to invest it in NVIDIA, a company known for its work in the tech industry, particularly in the realm of graphics processing units and artificial intelligence. Fast forward to March 2024, and that initial $1,000 investment, it's now worth a whopping $20,774. That's a staggering 1,977% increase from your original investment, or put another way, a 20-fold return on your money. Year on year, that works out to an average growth rate of 83%. To put it in perspective, that's like turning a single dollar into almost two every year for 6 years straight. But the question you're probably asking yourself is why? What propelled NVIDIA to such heights, and how did they manage to maintain this upward trajectory for 6 years? Well, as with any successful investment, the answer lies in a combination of factors, including the company's revenue growth, profit margins, and overall financial health. In the case of NVIDIA, a significant portion of their success can be attributed to their strategic focus on the booming sectors of artificial intelligence and data centers. They've managed to leverage their technological prowess and innovation to carve out a dominant position in these markets, driving their revenues and profits to astronomical levels. So there you have it. If you'd invested $1,000 in NVIDIA in 2018, you'd be sitting on a small fortune today. But don't kick yourself if you missed out. The key to successful investing isn't about hopping in a time machine, it's about understanding the factors that drive a company's growth and making informed decisions based on that understanding. Closing. Let's explore why NVIDIA has seen such a substantial growth. NVIDIA's revenue has been on a steady rise since 2018. In 2023, the company's revenue reached a staggering $60.9 billion. This represents an impressive compound annual growth rate of 39% since 2018. Let's break this growth down by years. Between 2018 and 2019, we saw a slight dip of -7%. However, NVIDIA quickly rebounded with a 53% growth from 2019 to 2020 and an even more substantial 61% increase from 2020 to 2021. After a flat year in 2022, the company bounced back with an outstanding 126% growth in 2023. This consistent growth in revenue is one of the major factors in NVIDIA's success. NVIDIA's profit margins have seen a significant increase over the years. Now let's dive into the specifics. To start with, let's consider the gross profit margin. In 2023, NVIDIA's gross profit margin stood at a whopping 73%. This figure is a substantial increase from the 5-year average, which stood at 63%. This 10% increase is a testament to NVIDIA's effective cost management and pricing strategies. Now, let's shift our focus to the net profit margin. The net profit margin is a key profitability metric that shows how much of each dollar collected by a company as revenue translates into profit. In 2023, NVIDIA's net profit margin was 49%. This is a significant rise from the 5-year average of 31%. This 18% increase indicates that NVIDIA has been increasingly successful in converting revenue into actual profit, which is a great sign for any investor. Beyond profit margins, we should also consider the overall net profit. In 2023, NVIDIA's net profit was a staggering $29.8 billion. This is a remarkable achievement, especially considering the challenging market conditions posed by the global pandemic. This also underscores NVIDIA's resilience and its ability to maintain a strong financial performance, even in the face of adversity. In conclusion, NVIDIA's profit margins have been on an upward trajectory, and this has coincided with a significant increase in net profit. The company's ability to generate a high profit margin, coupled with its substantial net profit, is a testament to its strong financial management and strategic decision-making. These factors have contributed to NVIDIA's robust financial performance, which in turn has played a pivotal role in driving up the value of the company's stock. NVIDIA's improved profit margins have played a crucial role in boosting the value of the company's stock. NVIDIA's financial health has been robust and improving. In 2023, the company's total assets were valued at $66 billion, a significant leap from the $41 billion recorded in 2022. This substantial increase in total assets is a testament to the company's successful operations and strategic investments. In the same vein, the net assets for 2023 stood at $43 billion, nearly doubling the $22 billion from the previous year. This increase in net assets is a clear indication of the company's profitability and financial stability. Moreover, the equity to total assets ratio in 2023 was 65% compared to 54% in 2022. This improvement in the ratio signifies the company's ability to finance its assets with equity rather than debt, which is a positive sign for investors. The current ratio, a liquidity ratio that measures a company's ability to pay short-term obligations, was 4.15 in 2023, compared to 3.48 in 2022. Similarly, the quick ratio, which measures a company's ability to meet its short-term obligations with its most liquid assets, was 3.65 in 2023, compared to 2.7 in 2022. These ratios show that NVIDIA's liquidity position has strengthened over time, indicating its capacity to pay off liabilities promptly. Finally, let's look at the inventory days, which measure the average number of days that items are in inventory before they are sold. In 2023, NVIDIA's inventory days were 115, down from 164 in 2022. While this is a decrease, there is still room for improvement, as a lower number of days indicates a faster turnover of inventory, which can lead to increased efficiency and profitability. In conclusion, NVIDIA's strong financial health provides a solid foundation for its continued growth. The company's ability to increase its assets, improve its equity to total assets ratio, and strengthen its liquidity position, all while reducing its inventory days, is a promising sign for any investor looking for a financially healthy company. NVIDIA's cash flow has seen a significant increase, and a DuPont analysis provides further insights. Let's dive in. In 2023, the operating cash flow was a considerable $28.1 billion. Furthermore, the free cash flow was not far behind, landing at $27 billion. This robust cash flow growth in 2023 is a clear indication of NVIDIA's strong financial health and its ability to generate substantial cash from its operations. Now let's move on to the DuPont analysis. This is a technique that breaks down return on equity, or ROE, into three components: net profit margin, asset turnover, and equity to assets. This analysis helps investors understand what is driving a company's ROE. In 2023, NVIDIA's ROE was an impressive 69%. The net profit margin was 49%, the asset turnover was 1.14, and the equity to assets ratio was 1.53. But how does this compare to the previous year? In 2022, the ROE was 20%, the net profit margin was 16%, the asset turnover was 1.32, and the equity to assets ratio was 1.86. So what does this tell us? Well, the substantial increase in ROE from 20% to 69% in just a year is primarily driven by the skyrocketing net profit margin. This suggests that NVIDIA has become more profitable and efficient in using its assets to generate earnings. In conclusion, the strong cash flow and impressive DuPont analysis results highlight NVIDIA's robust financial health. It also indicates a promising growth potential, making NVIDIA an attractive prospect for investors. So, stay tuned for our final scene where we'll wrap up our analysis of NVIDIA's financial performance. Remember, understanding a company's financials is the first step towards making informed investment decisions. The strong cash flow and DuPont analysis results further reinforce NVIDIA's financial strength and growth potential. To sum up, NVIDIA's impressive financial performance is reflected in its stock's massive growth. A $1,000 investment made in 2018 would have seen an astonishing 1977% increase by March of 2024. The company's revenue growth has been undeniably strong, with a compound annual growth rate of 39% since 2018. NVIDIA's profit margin improvement is not to be overlooked, boasting a gross profit margin of 73% and a net profit margin of 49% by 2023. The company's financial health is robust, with a current ratio of 4.15 and a quick ratio of 3.65 in the same year. Moreover, the positive results from the cash flow and DuPont analysis further underscore NVIDIA's financial strength. The company's operating cash flow in 2023 was an impressive $28.1 billion. Remember to subscribe to our channel for more insightful analysis of different companies. Feel free to leave a comment on which company you'd like us to analyze next.